Good morning, everyone. Welcome to the European crossover webinar. And we've seen pretty good little follow through here, continued still in equities. You can see S&Ps are basically right here at their highs. And actually a very key level. They did go and make it back up here to 27 yesterday. Well, they kind of pared back a little bit, which was a key level on the way back, on the way down initially. And we've actually pushed beyond that. Actually, I think 43.43, I think 43.33 was our bias chart resistance. So we have a secondary one at 43.43. Nasdaq also pretty good little pushback here in Nasdaq. We did make that run yesterday, and then we saw this market really come apart. Towards the very end of the day, after we actually got all the way up here to 80, I talked about point out the significance of this on the 2-hour chart, which is my primary time frame I use for, some people use 4-hour charts. I'm saying I use the 15 to 30 minute on a shorter period, but instead of a 4-hour, I use a 2-hour, and I find that to work out very, very well, as I noted, especially on the Nasdaq. But this was a key area right here. We did go and run out of, we don't say run out of gas, but we pushed here and we came back. But when we got above it, the key I was saying was yesterday is we need to get a close above 14,743. If we got a close above 1743, that would take us to 14,810. Now, when we rallied up here, we did have resistance, which I pointed out on the profile chart. We can bring that here, and you can see that resistance on the profile chart. You had the POC right here from, I guess it was the 17th. If you look right here, you can see right, they're coming in at 760, and then above that, we had the POC from the day before. It may not be as easy to see it here. There we go. And you can see that the POC from that day came in right there at 780, which is exactly where the market ran out of gas. And that just happened to be right here at 83. So I said, well, at the time I remember posting like, oh God, I'm really tempted to get it short, even though it was holding up so well. Because I felt we had a lot of confidence. And then if you look at the value area high on this day, was 788. So I felt, and I remember sharing that even on Twitter, saying, picture this and saying headwinds, and with the arrows pointing to not only the value area high, but the two POCs right here. And we did end up going and fading pretty quick. Also, Blake had tweeted about emerging market currencies not really making the move you would have expected, and that kind of gave me that confidence just to go and say, I'm just going to get short, and I'm just going to hang on to it. And then, to my surprise, we really faded. I mean, well, I was just going to be happy if it closed below 43. Figured in the after-hour session, we'd see some continued follow-through, maybe eventually to the teens. Well, heck, we got below 43, then we just started selling off. We got down to 30, and then we got into the teens, and then we just accelerated into the single digits, even past 14,700. So it's quite a pullback at the time, but we started to kind of push back a little bit here. We've had a little bit of back and forth here in the Asian session. Not as strong as you would think, considering that the S&Ps are right here on their highs, rebound highs. Take a quick look here at crude oil. That really got whacked yesterday. You can see here we broke below 60, actually broke a hair under 65 before rebounding. And gold once again, I mean, they really put into analysis, they really pulled the rug out from people again. We talked about the significance of the 1818, and we'd come up against this 3 different times. That 1818, as I told you before, is the VWAP, volume weighted average price, off of the March 30th lows. And you can see here that held the market as a support. Then when we broke lower, it became a resistance. You can can see that. Rebound, runs out of gas at the VWAP, goes all the way back down. So then on three different occasions, you can see that was holding the market at 1818. We finally break above it, and it looked like actually, I said if we got a close above 1824, that opened the door for a rebound to 1873. Well, we got the close, and then we made it all the way up. I think on that day, remember, I think our bias chart resistance, I think it was 1834 or something like that. And I think the market stopped there, and then I think we only moved it up a little bit higher. But it looked like it's still we were going to push higher. And then we fell apart and came undone. Well, I'll be doggone if, and we put it back to our resistance in 1818. And yesterday, they really faked out the bulls. We got it back above it, only to turn around and fail and fall right below it. Really, the door's open for them to go lower. Whether they do or they don't, I think that you've really tricked some bulls pretty bad. You've done them bad twice, so my thing would be 1794 down here. We'll find out whether or not that happens. Bitcoin, that finally broke. And you know that we finally got below 30,000, and for 2 weeks we've had our bias chart support. Well, almost 2 weeks, a little over a week now, at 29,204. And that comes off of the 2-hour chart. I think we went into details, I believe it was yesterday on that. But you can see where we're coming up with it right there. And that came in at 29, right, if you go there, 29,204. Anyway, that being said, the low for the day was, at the time when I shared that in the chat room and on Twitter, which actually was in the Asian session, not last time, but the night before, we were at 29. We were holding right here at the 88%. I think when we came on air, we were still holding around the 88%, or just a little bit lower, I believe. And we actually made it down to 29,299. So not bad. We're only off $99. And then since then, we've seen this market come back. It goes to show you, if you just go by the levels, you can still do a pretty good job on these markets without going to a bunch of monkey patterns and all this other stuff. So we'll go and take a quick look at where we stand here with the euro before we jump off in the analysis. Euro's still going lower. Each day, I think I did put that in the analysis too, just each day is subsequently lower. But we know, we've had this, is this key area, is this weekly level, we've covered that before. And cable, the same thing. Boy, this one's even, look at that, we've yanked down here, got a level here, this is 35.44, I think, for today. Aussie dollar continues to drift lower. We've stayed with our, I saw a gentleman, apparently must have been long, Aussie dollar, and he was calling it a dog and calling it everything under the sun. I guess he'd been long that or something. But if you go with, me, all about the body touches. So you go here, and I've had this since the beginning this week. That's our support right there, 72.87. Oh, wow, looks like we got there. Holy smokes. Right there, you see that? Put those body touches. Looks like it's 72.89. I put 72.87. We've had that since the beginning of the week. There it is. So let's just go and get started on the analysis. Oh, God. Heck. So the euro continues to push lower each day as we head into the ECB. Support comes in at support remains 1748. We've gone over that, which is the weekly level, with resistance at 1822. And I'm sticking to my guns, just so going to 1748. Once again, I always try to go with the body touches. As you can see here, we do have a body touch comes in right there at 1751. But when I look at this wick, it looks like it gets to 48. Today's low is 1751. It's actually 1752, 51.9. So not bad. We've had this since the beginning of the week. I felt that we're just going to get there. Whether it's ECB day or not, whether they overshoot it, I don't know. It's just I think we're going to 1748. Once in, it's best to go with the bodies, and then if you can, but in this case, you can see here pretty good reaction down here in this wick. That does confluence here, pretty close to this body, and 1748. We saw on the upside, 1822. Just take a look at a 2-hour chart. And we come up here and like, where can they go to? Boy, this thing continues to really suck wind here. And 1751. And if things were to turn around, but it certainly doesn't look like it. There. It really should. Oh, okay, here we go. Along with this, still comes up at 1818. I don't know, I came up with 1822. But I'd like to go with the body touches here, but because we got a little bit of wicks, and this one even pushing higher, go here with this one right here, and then you can see it coming across the wicks also there. Look at that. So it's 1818, it's not 1822. So I'm going to make that much difference, but that's what it should be. Okay, let's go and move into the cable. And as you can see, for those that are new, as I mentioned before yesterday, our bias chart is set up for basically for that day, for the next 24 hours, essentially. That's why you're going to see these more tighter, like, well, God, don't you think the cable should be more like 135 or 134, whatever? It's basically for that. And then only difference is, like I said, like the euro dollar, it's been weak. We'll go back to the euro. And this thing looked like it's just going down, down. Well, I'm not going to go, oh, it's this amount. Now the next day it's this amount. Now the next, no, it's just going to 1748. The way I looked at it at the beginning of the week, it's going to 1748 one way or another. And no use saying, it's this amount. Move it 10, 15 pips or 20 pips. It's this amount. Look, that's where it's going. That's where I felt at the beginning of the week because of the way it was acting, the way it was closing. And we're going to have to go down there. And so it's hence basically made it. I think it's off by what, 3 pips or something like that. So moving back to the cable. So I like to just keep going off the levels. Sometimes I might use a fib, but that's pretty much it. I don't use RSI stochastics. I don't believe in that stuff. It's not that. To me, look, oscillators are simply a derivative of price. That's all it is. So if you look at a market, if you take a look at the market, I don't have to look at this market to know, wow, the stochastics is really hugging near the lows. The RSI is hugging near the lows. So that's just my take on it. Just keep it pretty simple. And you can ask anybody here, we do pretty good on the levels overall. So, and once again, it's short-term trading to provide essentially day trading levels, which once again, with the whole thing with the bias chart, you use that in conjunction with your own work. So if you're thinking, wow, I'm short the euro, where's a good area where I think it should be covered and where I should be tightening my stops? Well, then that's why like I said, when we have the 1748, then you use that as a tool in conjunction with your own work. But anyway, that's a take on that. I just want to go and share that so you get some clarity on that. or it might seem like, well, he just kind of just looks at these levels and that's it. Well, I don't go with oscillators. I don't use all these crazy patterns or whatever. I will look at, like if we have an engulfing bar that's pretty huge for me, or we have a gravestone doji. I use those pretty good. I use, I'll recognize something like that. Here, you see right here, there's a gravestone doji. You see a pullback. Once again, on a very short-term basis. You can see the market quickly start to come back. Now, this is on a daily chart, but you can see if we move back up here and we're at resistance, gravestone doji, okay, now we're looking for a little bit lower. We're not, once again, we're looking for the day out to, max 24 to 36 hours max as far as the resistance levels. So cable took stops to the 135 handle. Support going forward is a weekly level. And when I say going forward, it's because I'm saying, like, you know what, give it up. Just go to a weekly and find out where this thing's going. And so we'll switch it to the weekly. So cable took stops to the 135 handle. Support going forward is going to be weekly level 35.44. Resistance is for Wednesday week 36.92. I think I meant, well, let me see. I guess it did say 35. Yeah, the 35 handle, but the support would come in at 34.44. Bear with me. There we go. And it came in with right there. I don't know why it's coming in. Oh, this is it was here, right there. No, it is right there. Because you can see you got a body here and a body there. Well, I don't know what's going on. I got 35.44, but look, when I look at it, it's actually right there. Oh, there it is. 35.34. That was my error. 35.34. Must have been tired. But anyway, I was watching the NBA Finals late last night, so Milwaukee won. So it should be right there. 35.36. See the touches right here, here, here. And I just try and go where the most amount of touches are, and that gives me a downside that I'm looking at. And that's actually, if we get right there off of that body, right there, 35.36. So I'll go with that. 35.36. I don't know why I came up with 35.44. And it's kind of like the euro. Now it's not as clear as the euro, which just kept falling and falling. But I'm saying, hey, look, that's where there's a lot of touches here, and it's on a weekly. If it falls down there, then that's where we're going to find support. It's still much lower. We're still holding over here, but I think that if we take one more dip, or whatever happens for the rest of the week, that's what I mean by going forward. So it's like the euro. Even though it was still a ways away from here on Monday, I'm like, forget it. It's going to 1748. I'm not going to go and say, 1810, 1801, 1792. No, it's going to 1748. That's the end of that story. And sure enough, that's where we went to, albeit off by 3 pips. That's been our revised chart support since Monday. So let's see, where are we going with the Nasdaq? Oh, okay, good. We're moving up higher. Now let's go move into the Aussie dollar. Same thing here. It kept falling, and we had this since yesterday. And I said, and looks like that's exactly where it went to. The low is 1789, 72.89. And same things. Usually it doesn't work out like this, but if something's just falling, like, forget it. Where's it going to go to? And, let's, stop with this one pip here, that pip there. Look, it's going there, and that's where it's going there, and that's the end of that story. So that's where I came up with the 17 right here. Came across. So look at this in Asia. I saw that gentleman post. I'm not going to say the person's name, but he was, I guess, exasperated. Well-known trader too, or technician, but exasperated with what's happened with the euro so much that he's like, this is probably the bottom, because he's really dogging it, dogging the Aussie. And I think it was like at 73 and a quarter, I think at 20. Looking at, well, let's see where it goes here. Looking at the weekly, looks like it's going to be 72.87, which we've seen here in The low for today is 72.89. Not bad, off 2 pips. So once again, it's not anything great I'm doing. It's just, and quite often, not every time, and not all instruments, but we will catch turns or we'll catch levels by only off a few pips. The good point was, I'll even give you this one here. I'm just pointing out, thinking like, wow, I don't know about the way he does his stuff. Well, okay. When we got this run here last week, and the high for the move, I believe our bias chart resistance was at 1069, and the high was 1067, and that was the day's high. The day's high, our bias chart was 10. I think it was 1069. It was either 1069 or 1070. I don't remember. And the high for the move, and we came on the air. We had not got there yet. I think we were like at 1050 something or whatever. And I put it at 1069, and the high was 1067 for the day. And then by the end of the day, I think we were like in the 40s or 30s. I think in the Asia it fell, and of course then the wheels, and that's actually on the daily. Here we go. There we go. Look at that. How you like that? 1068. I think our bias chart resistance on that day before it even got there was 1070. So off by 2 pips. And then by the end of the day, look where we're falling. And then we kept falling. So once again, it's just that I just go by the levels. That's it. I go by the body touches. I'm not looking at the RSI got here, and then it turned here, then it did a turn around, then it flipped around, then it did a U-turn. I just don't go with all that stuff, okay? So no disrespect to anybody who does that. But, like I said, for those that are new, they're thinking, I don't know about this. It just seems like he just points at some levels and says, oh, that's it. Well, you know what? It's been pretty successful so far. You can ask the people in the chat. Although I haven't traded FX in a while, I used to trade FX almost exclusively. But it's all about the levels and just technical analysis, and that's it. So let's go on and take a look at the Aussie dollar. So the Aussie slide has been relentless. Support looking out remains, because we had it, 72.87. Low for today, 72.89. With resistance at 73.51 if it wants to try and turn around. And then I'll generally look at a 2-hour chart to get these more shorter term levels. And this one I think I had to kind of like dance around and say, because there wasn't any real bodies there. And I'm thinking, well, that's, if we do get a rebound, it's going to go a little bit further than that. And I thought this body wasn't even far enough. So I came up with 73.51, which came, oh, it's right at the touches here. Right there. Like, okay, well, I'll go with that. Coming across here. So it's 73.51. And let's go move into the dollar yen. What the heck? Oh, okay. So the dollar yen posted a bullish piercing candle pattern on Tuesday. Move this back to daily. There you go. See that? So the dollar yen posted a bullish piercing candle pattern on Tuesday, suggesting the downside may be over. Resistance on Wednesday will be 10.19. We're certainly making our way. High for the day so far is. What the heck happened to the dollar yen? Doggone, I must have knocked it out. Back to my. No. High so far has been 10.15. Okay. So, dollar yen posted a bullish piercing candle pattern on Tuesday, suggests that this downside may be over. Resistance on Wednesday will be 10.19 with support at 9.57. So 10.19. 7 in case we fell back. It certainly didn't seem likely, but you got to put something on the downside. And there we go. You see how it comes up to this wick? So there's my 1019. Because there aren't any bodies that I see, because anything it's already been resolved here. So these don't count necessarily unless it's a good confluence. So I got to look here, and I'm like, well, heck, this thing it could, but the next significant body is not till 1060. I can look at this body here, but we've already gone beyond that. So I wouldn't place any significance on that. So now I just got to look for confluences of wicks. So I've got kind of right here, but this wick below, and this push here. Okay, I'll go with that. So that's how I came with the 1019. Now let's go to the cash dollar index. So the dollar index kept the steady pace going to the upside, albeit in a restrained range. You see here, 92.83 is that breakout level. We kind of popped our head above it and slid back, but closed at 92.83. We went a couple of days go higher. Today we're still pushing up even higher. Resistance remains 93.26. Remember, nothing's changed. We're looking at a daily, and then also the weekly level coming in at 92.52. 93.53, I believe it is. But we're still, like I said, we're kind of pushing along. But at this, as quiet as it's been, I'll just stick with the 93.26. And then support, we moved it to 92.52. It's just stair stepping. You can see the stair steps. Now let's go to Bitcoin. Bitcoin found support $100 just above the bias chart, 29,000, actually 204. Oh, holy smokes, it was 204. So actually, I found it about $95 above it. But we've had this in place for almost 10 days. Once again, it was the same thing where I'm like, you know what? This thing's going there eventually when it breaks. Although I was surprised. I think we had it for a little while. I kept thinking it was going to break, and it just kept holding it. 31,578. You can see here on the 31,578, I'm just going against the bodies. See? So I like to go with the bodies because I always say the bodies are put up or shut up time, meaning the close, although this is the open. I always say, how many people sold the high and how many people bought the actual low? But the close is the most important because that's put up or shut up time. If you're wrong, you're wrong. I got to get out by the close. Whether it's the close of an hourly, the close of a 2-hourly chart, close of a daily, close of a weekly. So that's where I came up with this level. You can see how much the market, we actually saw a pretty nice bounce off of that earlier. And then we came back and we went below, but we couldn't close below. We finally closed here below it. Didn't see much follow through. We pushed a little bit further. And then yesterday, then we came down here. And then once again, we've already addressed that. We came up with this based on the, to pull it down here. There we go. The 2-hour chart, same thing. You're seeing the same principle. You see, I go with that body. It was 29,204. The low for the day was 29,299. Not bad off $95. And since then, we've seen a decent rally off of that to the tune of what, $1,600? Not bad. So 29,204. So support will remain, and I put 29,200, but we had 204, with resistance at 30,983. Look at that. The high so far is 30,959. Now, how do you like those apples? Nothing special. I just went with the wicks and where we could possibly go to. Let me see. Out of this whole move, off by what, $95? And then a rally. What is it? 200 of $1,600 in less than 24 hours. And the top so far off by only $30. So let's go and move into the S&Ps. Okay, looking at the S&Ps. The S&P futures continued with the solid rebound rally, finding offers at 43.27. We talked about 43.27 being a significant level. There's a 27 from on the way back down. We talked about that level, in the chat room and all that on the way down. And now on the way back, that's what ran out of gas partially, but we've reasserted ourselves. So resistance on Wednesday will be 43.33, which it got to 43.33. Look, now it's still pushed up here, followed by 43.43. Well, we're on our way, and look. The only thing is that they did announce that the Democrats are going to be voting on the whatchamacallit, the infrastructure thing. How much extra juice they could give, I don't know, but you have to be aware of that. So we'll go with the 43.43. Heck of a rebound from those lows. And support will be 42.98 followed by 42.89. So we're just going to keep it simple. Once again, you can take a look at this and say, well, if you look at it, and we're looking at realistically, if you're looking down here, probably looking at 43.12. I'm not, that's on a very short-term basis. I guess at this point we should go, I would look for 43.12. And actually, it's actually, I remember on the way down, you after a while, you follow these markets, you remember these levels. And it really should be, even though I don't see it here, should be 43.09. And then we can go back to 42.98. So we'll go to 43.09 since this market continues to push away. So if we were to move lower, so it doesn't look like it, and we break lower, I would say 43.09. And I don't think this is going to pertain for today, but then 42.98. Let's go move into the Nasdaq. This one's had a pretty good run back. And here's a 14.810. And I said that if, let's take a look at the 2-hour chart, if we get a close above 14.743, we haven't done it yet, about another 90 minutes to go, that would send us to 14.810. Well, that's interesting because I wasn't even looking at the daily. I was actually looking right there. That's actually 14.817. I might have said that and didn't even realize it. That's what I was looking to for the challenge right there. You know me, I'm all about the bodies. So 14.817 is actually, but when you look on here, the daily, look at that. 14.810 has been huge. But I'll stick to, which was what I was saying, is if we got that 2-hour close above it, I thought that we would we could, not that they couldn't get to 783, which essentially they did, although I think the high was 80. My thought was if we get above that, they won't be satisfied with this. They'll want to push beyond that. Now they came up here, but they didn't close above it. You can see here, like I said, then the wheels came off the caboose going into the close. We faded 90 handles from there. And so we'll be looking for 14.817. And we can take a look when that's on a very short-term basis. 89.50. That's just a hair above that. So it's, see, there's 812. You can see the 812 right here, but it's actually a little bit higher. So I'll go with that 14,817. A ways to go. And the pullback. Wow, I didn't realize it fell off that much. Look at that. That sucker fell off on almost 100 handles. It's 90 handles. Well, there's support right there, 686. There's 680. There's 672. The midpoint back would be 14,650. And then the POC for this day would be 14,639. Let's go with the RTH. Half back would be 650 of the RTH. No real confluence, I see. Here's this one for 648, but and it's also the initial balance high 653. Okay, yeah, and then the low here, right there, comes in at 657. So let's just go 650. So I was telling, someone's asking about well, they were asking, they were making a comment, and well after the market closed. And I was telling them, look, I'm not a profile aficionado. It's just that the way I use this confluence. So I'll be looking at previous POCs to see if they're all kind of lining up. Just like I said yesterday, we've got headwinds. And when I said that, I pointed to the POC here, which was 677, and the POC there, which was 780, and that's where the market ran out of gas. And then we rotated lower. And then I'll use the value area high and low. Same thing, see if I can see confluence. I'm not good with, okay, it's a poor high, it's a poor low, single prints, blah, blah. I just know what I know, and I just go with confluences. So far, it's worked okay. So just go 650. 817 is a little bit of a push here. We'll see whether or not they can get there. And let's go move into crude. Not crude, gold. So, gold pulls the rug out from the bulls again. as in use a sucker. As the market took out 1818, rallying to 1826, only to fail again, slightly below 1818. Support now will be 1894. And the reason I'm putting 1894 is like, okay, because we did pretty good. Remember earlier in the week I said 1803 followed by, and I actually pushed a little bit further. I could have said 96, but I said 94, and it went to 1803, and then it held. And I think it bounced a little bit, and when it broke lower, it broke lower. The 1794 is a little bit of a stretch because it bottomed at 1796, and then we saw, well, you can see right there. There's the bottom. There's 1796 before we rebounded back. But I'm like, you know what? These guys have already been played the suckers twice. I'm thinking, and it doesn't mean they couldn't even break them lower. Maybe hold them here, but it's like, you know what? I don't even care. Just go with 1794. Some of these suckers may just throw in the towel at that point. And it's faked out some pretty good moves here. I mean, I myself thought, hey, if we got the close above 1818, which was on the first go round, and said, hey, if we get a daily close above that, then it opens the door for 1873. Well, they got above it and they closed. I think I remember it was 1822. So our first initial target, I think it was our bias chart resistance at that time, I believe it was 1834, and we got to 36. And then, so here it is. I'm guessing. Yeah, see, it was 35. And I think on that day we had 34. So that was a pretty good move. But I thought it was going to keep on going higher. That was just the bias chart resistance. It came back, and I go, well, as long as it defends 1822, which initially it did, but then we slipped below 1818. And I'm like, oh, that's no good. That's no good at all. And then, of course, then the dam broke. And then we come back up, only to trick a lot of people and fall back in. Resistance is going to be 1814. Wow, that's pretty good. Look at that. I did this in Asia. Look at that. What am I going to say? Yeah, only off by, what was it, off by 30 cents? Not bad. Look at that, 30 is 1814. I did this in Asia, but I have to say it was late Asia because I was watching the basketball game, but still, we weren't there at 1814. We weren't anywhere even close. Look, we were down here, 1807. May not seem like that's a whole lot, but I tell you what, I only missed it by 30 cents. Can't beat that with a stick. And let's go to crude oil. This one has really surprised me how much it's fallen, and we've rebounded. I was going to try and trade this market more actively since the micros had come, because I thought you'd see a lot of activity with the micros, and we've actually had a lot of activity, but I've just been too busy with indices. But I thought this was going to be a good trading market, and it actually has turned out to be a very, very good trading market with the inclusion of the micros. And boy, we've had some pretty good wild swings. Look at this sucker. Look on the 2-hour chart. We were here. Look at this thing. Then look, we broke below 65, and look, we've rallied up to, holy smokes, man. So, crude further slid to $65 before closing above 66. Resistance for Wednesday will be 67.79. Look at that. We are still cruising. We're going beyond the 67.79. And I think there was anything I could find. I just went with this previous high. I think that's 67.79 right there. With support at 66.14. Holy smokes. Now this one is where, and we do that. We don't act stubborn and say, well, that's it. It's 66.614. No, you got to respect if we see a dramatic move, which once again, if you look at it on the 30 minutes, look at the 30 minutes or the 15, that's a pretty good solid rebound, dramatic move. Look at that. I actually dipped below 65. So it's like 64.89 or something. No, we hit right at 65. Right there. Maybe 64.99 or 98. And then look at this swing bat. Holy smokes, that thing has been a lot of good. It's been a lot of good activity ever since the micros came in. Of course, a lot of it had to do with them signing that oil producing agreement, blah blah blah. So now in a situation like that, then I look for a fib to see is there something. Um, this wasn't very much of a rebound high. We did hit here, and we jumped back up here. You have to go to a 2-hour chart. You can see this hammer. Oh, and I like to trade off of hammers too. So, and especially a hammer on a 2-hour chart, ooh, that's usually pretty solid, especially in the Nasdaq. Let's go with the fib, see if there's something there. Hmm. 38% comes in at 68.84. So a long ways off. Almost $1. Let's go with the 30-minute. Right there, 68.08. But you can see the little wicks hanging down here. So let's go with 68.66 for resistance. Our new revised numbers, considering the magnitude of the move that we recently had. $168.68. Always trying to get some confluence of touches. So you can see here, if you went with the actual low, that would be right there at 64. So I go with this low, and at least there's a little bit of semblance of a touch right there. So there's your 68.68. Actually, if you went with these two right there, that pushes up to 68.73. But we'll stay with 68.68. Support, we try and go with the touches. You can see here. I'll show you here. See all those touches? High, 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 low, 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 low. Almost a high. Oh, high, kind of like a little bit of a battle here. High for the most part here. So a lot of touches there. So that would be 66.95. Might be a little bit high, but we'll just go with that. And there's the bias chart. We'll get that posted into the room. And thanks for joining us here on the European Crossover webinar. And Brian said hi. Hi, Brian. And there we go.